There's a tech stock you can buy right now, hold and retire rich. This is according to Tim Plaehn in his latest stock teaser. The bad news is he won't tell you the stock unless you buy his newsletter. The good news is he left enough clues in the presentation to figure out the stock, and I reveal it here for free. If you appreciate me doing this, just drop a like and subscribe for more videos like this one. Let's get started. Let's investigate the teaser before revealing the stock. In this teaser, Tim claims he knows the best tech stock to help you retire, and it comes with an eye-popping 13% dividend rate. According to Tim, this is one of the highest dividend rates you can get. Additionally, Tim claims you just need $25,000 to get started if you're young. But if you're older, you can collect over $50,000 a year in just 36 months. Also, Tim claims this stock gives you backdoor access to the biggest ideas coming out of Silicon Valley that you typically couldn't be able to invest in. And Tim says this company has $1 billion in deals lined up for the year, and this includes companies in the AI sector, medical sector, e-commerce, and more. The type of investment Tim is talking about here is a business development company, also known as a BDC. A BDC is a type of investment company in the United States that primarily provides financing to small and medium-sized businesses, often through debt or equity investments. BDCs are designed to help these businesses grow by providing them with the necessary capital. They are regulated by the U.S. Securities and Exchange Commission and must distribute at least 90% of their taxable income to shareholders in the form of dividends, making them similar to real estate investment trusts in terms of tax treatment. However, they come with risks, including exposure to higher-risk companies that may have more volatile earnings or face financial difficulties. Additionally, BDCs can be sensitive to interest rate changes, which can affect their profitability and the value of their investments. According to Tim, the BDC he's recommending invests in diverse businesses, and one of the companies is making strides in curing cancer. Another company Tim's favorite BDC is investing in is a company that makes zero-emission buses, which Tim claims will make up over 80% of the market eventually. This BDC also is one of the early investors in Impossible Food, and their valuation has grown by billions since. In total, the BDC that Tim wants you to buy has investments in more than 500 different companies. I'm going to reveal the stock in about 30 seconds, but before I do, I want to tell you about Alpha Picks from Seeking Alpha, which is my favorite stock picking service. Alpha Picks gives you 2 picks a month and a complete portfolio of stocks to invest in, and since it started 2 years ago, it's been crushing the market. My favorite thing about Alpha Picks is that they recommend stocks most investors haven't heard of. For example, they recommended MI Homes in October 2022, and the stock has gained 332% since. They recommended Modine Manufacturing Company around the same time, and it's up 443%. And if you click the link in the description, you get $50 off this service. So make sure to click that link to take advantage of this amazing deal. The BDC that Tim wants you to invest in is Hercules Capital, and the ticker symbol is HTGC. Hercules Capital is a specialty finance company that provides financing solutions primarily to venture capital-backed companies in various industries such as technology, life sciences, and renewable energy. They offer structured debt, growth capital, and equity financing to help these companies expand and develop their businesses. Hercules Capital operates as a business development company and generates income through interest on loans, fees, and potential equity gains. Their focus is on supporting innovative companies during their growth stages by providing them with the necessary capital to scale. Over the past year, Hercules Capital's stock has experienced a positive performance, with a price increase of approximately 10%. The stock has shown resilience and growth, especially considering market conditions. The stock's beta is 1.35, suggesting higher volatility compared to the market. Additionally, Hercules Capital offers a strong dividend yield, currently around 9%, which makes it attractive for income-focused investors. Hercules Capital's share price saw a sudden drop on August 1, 2024, following the release of its second quarter financial results. While the company met analysts' expectations for earnings per share at 51 cents, it missed the revenue forecast. Hercules reported $125 million in revenue, which was slightly below the anticipated $127 million. This revenue shortfall led to investor concerns, despite overall solid performance metrics like a strong dividend yield. When it comes to investing in Hercules Capital, there's a lot to like about this company. First off, Hercules Capital is a leader in providing venture debt to high-growth, innovative companies, particularly in the technology, life sciences, and sustainable and renewable energy sectors. This focus on cutting-edge industries means Hercules is well-positioned to benefit from the growth of these rapidly expanding markets. Another major advantage of investing in Hercules Capital is their solid track record of strong returns. Over the years, they've consistently delivered attractive dividend yields, which makes it appealing for income-focused investors. The company's disciplined approach to underwriting and its ability to source high-quality deals also contribute to its robust financial performance. Additionally, Hercules Capital has a well-diversified portfolio, reducing risk by spreading investments across various companies and sectors. This diversification is crucial, especially when investing in companies at the forefront of innovation, where the potential for both high reward and risk exists. Finally, the company's experienced management team is a significant asset. Their deep industry knowledge and expertise in venture lending provide Hercules with a competitive edge in identifying and capitalizing on the best investment opportunities. This leadership team has guided the company through different market cycles, ensuring stability and growth even in challenging economic environments. In summary, Hercules Capital offers a compelling mix of exposure to high-growth sectors, strong income potential, diversification, and experienced management, making it an attractive option for investors looking to tap into the innovation economy. When considering an investment in Hercules Capital, it's important to weigh some of the potential downsides. First, while Hercules Capital focuses on high-growth sectors, these industries can be volatile. Companies in technology and life sciences, for example, often face unpredictable challenges, from regulatory hurdles to rapid changes in market conditions. This volatility can lead to fluctuations in Hercules Capital's portfolio performance, affecting returns. Another potential drawback is the interest rate environment. Hercules Capital operates primarily as a lender, so its profitability is closely tied to the prevailing interest rates. In a rising interest rate environment, the cost of borrowing for their portfolio companies can increase, potentially leading to higher default risks or reduced demand for venture debt. Conversely, in a low-rate environment, their income from lending might not grow as much as investors would like. Additionally, Hercules Capital's business model relies heavily on the success of the early-stage companies they fund. While there's a high potential for reward, there's also a significant risk that some of these companies won't succeed. This reliance on the success of relatively unproven companies can introduce a level of uncertainty to the investment. Lastly, as a business development company, Hercules Capital is subject to specific regulatory requirements, including restrictions on the amount of debt they can carry. While these regulations are designed to protect investors, they can also limit the company's ability to leverage opportunities, potentially capping growth. In summary, while Hercules Capital offers exposure to high-growth sectors and attractive dividends, the risks of volatility, interest rate sensitivity, reliance on early-stage companies, and regulatory constraints are important factors to consider before investing. And if you really want to make money with the stock market, make sure to click the link in the description to check out Alpha Picks from Seeking Alpha. I've reviewed hundreds of stock picking services, and this one performs the best. Since its inception 2 years ago, it's absolutely been crushing the market and has tripled the returns of the market in that time period. And if you click the link in the description, you get $50 off this service. So make sure to click that link now and start investing the smart way.